In this video, we will explain why it is important for employers to use the correct income and deduction codes when creating the monthly salary information, as well as the annual income certificate, also known as the IRP-5 or IT3A certificate. It's not sufficient to simply pay your employee the correct amount. Reporting that payment accurately to SARS is equally important. The Employer Reconciliation Business Requirements Specification Document, BRS, which can be found on the SARS website, guides employers to use the appropriate income and deduction source codes for every kind of payment and deduction. Using the wrong code, even with the correct amount, can cause rejection, corrections, penalties, and will create income tax problems for employees. Remember that correct pay as you earn source codes on IRP-5 and IT3A certificates. Give one clear compliance story. Let us start with the first income code, 3601. This is used for monthly basic salary or wages. It represents regular employment income, and it forms the base for calculating of pay as you earn, unemployment fund, and the skills development levy. 3601 must only be used for normal salary. When it is used incorrectly, for example, a once-off or overtime income is treated as regular salary. This will lead to incorrect pay as you earn calculations, mismatches between EMP 201s and IRP 5s, and even EMP 501 rejection. An incorrect pay as you earn deduction can affect an employee's annual tax assessment, as this oversight may result in an outstanding tax liability. The next code, 3605, is for annual or once-off payments. This includes bonuses and leave payout. A common mistake is capturing a bonus under 3601 or splitting a part of regular salary into code 3601 and 3605. These errors often result in refund delays or unexpected tax debt payable for employees and impacting their tax compliance status negatively. For an employee receiving an overtime payment, code 3607 must be used. Including overtime in the salary and reporting it under code 3601 may trigger an investigation and an audit by the South African Revenue Service. As the IRP-5 certificate would not accurately reflect the employee's actual income and tax liability, employers who make use of independent contractors must use code 3616, as this is used only for people who are not employees. To use the code 3616 instead of 3601 for an employee or treating an employee as a contractor to avoid pay as you earn or unemployment insurance fund is a serious offense. This also affects employees' unemployment insurance fund, loss of benefits, reduced employment protection, and may create a tax debt on assessment. Employers play a critical role in ensuring that employee tax assessments are accurate. Two important deduction source codes on the IRP-5 certificate are 4001 and 4005. Source code 4001 is used to report approved pension fund contributions, while source code 4005 is used to report the medical scheme contributions paid and deemed to be paid by the employee. This amount reduces the employee's taxable income and must reflect the actual amounts deducted. Accuracy leads to fair tax outcomes and protects both employees and employers. Most payroll problems are not about the amount. They are about using the incorrect source codes. The amount may be correct, but the wrong code makes the submission incorrect. The business requirements schedule requires correct interpretation, not just correct totals. The use of correct pay as you earn source codes ensures smooth submissions, accurate IRP-5s, and faster processing. The right code equal to the correct result, a compliant employer, equal to happy employees. Want to learn more? Visit the SARS website. Select the Businesses and Employers section for more information on payroll-related information. Get informed. Get confident. SARS. At your service.